The month is over and Nvidia closes with the doji candle. Today's video, I'm going to share with you guys 2 reasons why stocks will be dropping. Stay tuned to the end because we are going to announce the winner from Friday's video for the Take Profit Trader 50K test account. Now, last week, more specifically, we come over and take a look at the volatility index, also known as the fear index. We can see on Friday, it was up 6.3%. And this is something I've been warning about for quite some time. When we see the VIX at these lower levels, it is prone to get a volatility spike at any moment. Now, as we come over, look at this stat brought to us by Wayne, when the 12-month high is set in the last week of August, and this stat goes all the way back to 1951. We've had 12 occurrences of this happening. Now, only one time was the month of September flat. That was in 1979. Now, we did have one up month in September, which was 2018, but every other month, the market has been down in September when we had made a 12-month high the last week of August. If we come down and look, we can see we've had 1 week up, 10 weeks down, and 1 week was break even, which was in 1979. Now, the average change is going to be about 2.13%. And seasonality wise, this is also correlated with one of the worst months of the year. However, when we look at the fear and greed index, with what happened on Friday, the market said, hey, nothing to worry about. Come on in. The water is warm. We still have a reading of 64. We are still over into greedy territory. Then as we come over and look at the most recent investor sentiment survey, this week, the bulls stepped up a little bit, went from the prior reading of 30.8 to now a reading of 34.6. We see the bears drop down as well from 44.8 to 39.4. However, the undecided or the neutral category jumped from 24.4 to 26%. Then we got news out that Trump's tariffs are void. Appeals court basically upholds the ruling saying that Trump basically overstepped his powers. Now, this could be a problem for the market. Everyone knows, or at least they should know, one of the things the market hates the most is uncertainty. Now, what this article basically goes on to say is the tariffs are still going to be in effect until I think October 14th, and Trump will be appealing the ruling to the U.S. Supreme Court. However, Trump's sector-specific tariffs, including copper, steel, remain safe from ruling potentially foreshadowing a new trade playbook for Trump. So now let's come over and take a look at some of these monthly charts now that the month of trading is over with. We saw Nvidia with a doji looking candle, but what about some of the other Mag 7 stocks like Apple? Apple closing near the upper end of the range, very small wick on the bottom and a larger wick on the top, and we're closing in the upper third of the range. Then we dive down and start looking at Meta. Meta having a shooting star type of candle, wick on the top after going above the prior month's high and now closing down below that area and really closing right in the middle of the prior month's candle. We take a look at Google. Google closing right near the monthly highs, small little wick on the top, closing the upper third of the range, most certainly is bullish. We look at Amazon, kind of a wick on the top, wick on the bottom, but still closing the upper third of the range. We come over and look at Microsoft. Microsoft with an inside candle, and with an inside candle, what do we normally expect? We anticipate we are going to get a breakout or breakdown from that range. However, we got to be cautious because quite often the first way a market breaks out of an inside candle day ends up being nothing more than a trap. So now when we come over and look at the indices, we start off looking at the SPY real quick. We see the SPY on the monthly candle, small little wick on the bottom, small little wick on the top. And if we look from a monthly perspective, from that hammer candle that we saw formed on the month of April, all the way up to the high, we can see that the SPY has went up 35%. That is a massive move on the monthly chart. But I do want to draw your attention down here to the MACD indicator. Notice the MACD indicator, as we're making new all-time highs, the MACD indicator is not confirming those new highs, which also makes it suspect, aka a correction could be right around the corner. Now, if we come over real quick and we take a look at the weekly chart. On the weekly chart, we have more of a wick on the top of that candle than we do on the bottom. MACD indicator is still very strong at this moment, and we haven't really started to curl over just yet. However, when we do, one of the areas I will want to watch is going to be this minus development area within the profile, right here about 614.25. But then as we come down and start looking at the daily chart real quick, notice we already have this drawn out. We have an A to B equals C to D pattern. Here's the A to B leg. We have the corrective leg from the B to C leg, and we project right up here for 659.95. Now, I do want to also bring your attention. Notice As we pull back on Friday, where do we come down to? We came right down to the anchored VWAP that is anchored right down here from August 20th. Now, the question is, will this be defended and will the market start going up next week? Because something that I do find very interesting as everybody's looking for the market to go down, why so many investors think stock market is forming a bubble. And what this article goes on to say is, when we go down, we look real quick, look at how the search results are basically going up in search terms of a bubble. And everybody's starting to get a little bit fearful, or should I say, a lot of traders and investors are getting fearful that maybe, just maybe, this could be like the dot-com bubble burst. And Nvidia's monthly chart is doing nothing to calm down those fears. Now, I'll let you guys know right now, Apex having a massive 90% sale off all their evaluation accounts. Best yet, they've lowered the activation fee and you can pass in as little as 1 day. Take advantage of this offer. Use the link in the description box down below. Use promo code Mike at checkout. Now, earlier we touched on September not being a good month for the market and with the uncertainty out there, not looking good. But then we have something else to worry about. Government shutdown, showdown with GOP puts Democrats in a bind. Now, we are facing, once again, a potential government shutdown. Let me know in the comment section down below. Do you think the government will actually shut down? Or do you think they're going to come up with a deal before it's too late? Now, we come over, look at the Dow Jones chart on the top versus the transportation index chart on the bottom. Look at it very closely. We see the transportation index doing what? Making lower highs. Now, this is setting up divergence. While the Dow was able to make new all-time highs, the transportation index simply not confirming that. Every time we pop up, it's making a lower and lower high. Something else we need to keep a close eye on, and that is going to be the 10-year yield versus the 2-year yield. And when this starts to steepen, that is when the market most certainly becomes under pressure. So we most certainly want to keep an eye on that moving forward. But then we come over and look at the SPY versus HYG. HYG being high yield bonds. And notice as the SPY is starting to roll over here a bit, so is HYG. There's not any type of divergence setting up. They're kind of moving, at least at this point in time, kind of lockstep. Now on Friday, we saw technology was the big laggard out there for the sectors out there. Financials barely able to eke out a gain of 0.1. But if we look at the overall week performance, energy by far outpacing everything else. The big laggard out there was utilities. And if we look at technology for the week was barely down, even after we saw the bloodbath that we saw on Friday. We look right over here, Nvidia not looking good, comes right up here, basically going up, testing all-time highs. And look, as we came up there, look at how weak the MACD indicator was looking. That was a very clear indication we were likely going to get a pullback in this market. Now, we jump back over and we look at the SPY real quick. I want you guys to focus. Notice the MACD indicator is trending lower, but now we come over and look at the volume profiles. I want you guys to pay attention. Where are the high volume nodes on the profile? We have a distribution area right here on the profile, somewhere from about 637.72 down here to about 634.93. So if we can get down below this high volume node at 644.05, very good chance we're going to come down, try to retest the secondary VWAP, which is anchored right down here from August 1st, and try to test out this high volume area. If we pull some Fibonacci retracements from the swing low right up here to the swing high, notice we just barely made it to 38% retracement. Quite often, at minimum, the S&P will retrace 50%, and even down towards the 61.8. If we start breaking the 78.6 Fibonacci level, watch out, we're probably going to do 100% Fibonacci retracement and potentially go down even further. Now, we come over and look at the 4-hour chart. We can also see divergence setting up. On Thursday, we can see we went ahead and pushed on up. And then on Friday, we got smacked down just a bit. We can see clearly MACD divergence up and around those highs. But then we look at the volume profile out here from Friday. Notice on Friday, we had that massive gap on the way down. Then as we came down, what do? We basically consolidated near the lows. And that set up a lowercase B as in boy shape volume profile. Now, this is going to be critical. If we start breaking above the upper edge of this distribution area, it's quite often we're going to go ahead and explore the upper third of the range. And in this case, for me, it's going to be about 646.93. Now, if we do make it up there, that's going to bring another situation in play. This large wide candle that we had down on Friday, quite often, if we go up more than 50% of a big down candle, quite often we're going to undo the entire candle, probably even come up, touch gaps touch gap resistance, and then we'll see, do we fill the gap and potentially continue to run up? Now, I do want to caution you guys though, as we push down and we continue to consolidate here, if the MACD indicator makes it back towards the zero line and then we start breaking down, this could actually end up turning into nothing more than a bear flag. And if we look at where that target would be, if the high holds that we set late on the day on Friday, then that would give us a price completion down here about 638.83. Now, when we come over and look at the futures markets real quick, last week we had an entire range of 92.25 points, a very tight range. And notice where we dropped back down towards, right down towards the high volume area and right near the point of control from the prior week. Now, as we look at the volume profile levels, value area low will be down here, 6460.75. We're going to have the point of control at 64.70 3/4, and then value area high at 64.97.75. Now, one of the ways I want to play this is if we start breaking down below value area low, then I want to start looking at some of these high volume nodes on the profile and then see, can we undo the entire volume profile range from 2 weeks back, coming all the way down here near value area low. However, when we come over and look at the 30-minute profile, we can see that lowercase B as in boy shaped profile. And during the live stream on Friday, we were talking about a retest of some structure breakdown points. One was right here. The other one was right up in here. And we just barely missed that structure breakdown retest on that late move at the end of the day on Friday. Now, if you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. So now as we look at this, we also have the floor trader pivots. On Friday, we were able to once again test that floor trader pivot. So as we're looking at the volume profiles, keep in mind, the futures markets will open up Sunday night. They close Monday at 1 p.m. Eastern time. So the futures markets will open. So it's going to be critical. How do we trade around this distribution area on the profile? Can we break above it? If so, I want to target this structure breakdown point, which goes from about 64.80.5 up here to about 64.86. Anything above and beyond that price point, I would then want to turn my attentions just slightly above it towards that minus development area. Then another minus development area up here, 65.04 up here to about 65.08. Now, in the event that we break below this distribution area, I want to turn your attention back over towards that minus development area that was set on August 22nd. Now, I'm going to go ahead and simply highlight that entire area on the price chart. You can see we've already come into that level once, we reject it out. The second or third time we come into it, quite often, we're going to undo that entire minus development area. And the bottom of that's going to be down here, somewhere in the ballpark of 64.28. Now, as we come over and look at the dollar index on Friday, closing with the doji candle. Then we come over and look at gold smashing not only through the 61.8, smashing the 78.6. Now that we're above it, guess what? Gold is likely going to go ahead and make a new all-time high. On Friday, gold was up 41.8. Now, something else I want to keep an eye on is going to be the 10-year yield. We see on Friday, 10-year yield kind of having an inside day, but it was up on the session. Now, we want to keep an eye on it. If we see the 10-year yield starting to rise, that could be problematic out here for the stock market. Now, before we come over and take a look at the NASDAQ real quick, keep in mind, we do have a little bit of earnings coming out next week. Tuesday, we have NEO. Then on Wednesday, we get Macy's, Dollar Tree, Salesforce, just to name a few. And we look at the big expected movers out there. ASAN plus or minus 16% is the expected move on Wednesday. PD expected to move plus or minus 13%. Salesforce about 6.5% or so. Then we got Macy at about 9.5%. Then we go over and look at the economic calendar. Let's not forget, Monday is going to be a bank holiday for the US and for Canada. However, this week is going to be very important. On Tuesday, we get the ISM numbers coming out. Then on Wednesday, we're going to get the JOLTS job opening numbers coming out. Then on Thursday, we get the ADP non-farm employment change. Then we get the weekly unemployment numbers coming out along with ISM services PMI. However, on Friday, we're going to get the average hourly earnings, the unemployment rate, and the non-farm employment change. And I want to remind you guys of something real quick. We can see they're expecting 74,000 jobs. We know Powell and the Fed is very concerned with the labor market. And if we open this up real quick, I want to take you down memory lane. Back on August 1st, we can see we had a revision from the prior month, and they revised the prior reading from 147,000 all the way down to 14,000 jobs. Are there going to be more nasty revisions at this NFP this week? Let me know your thoughts in the comment section down below. Now, before we come over and take a look at the QQQs real quick, let's go ahead and announce the winner for the Take Profit Trader 50K test account. And the winner is Autobot123. You have 48 hours to respond. I went ahead and tagged you in the comment in the video from Friday. Now, we come over and look at the QQQs on the monthly chart. You see we have a little bit larger of a wick on the top than we do on the bottom of the candle. Also, as we've been able to push to new all-time highs, the MACD indicator is basically at equal highs, aka we have a divergence setting up. On the daily chart, notice we grabbed our Fibonacci retracement tool from the swing high down to the swing low. Notice where we stopped at, right at the 78.6. So is this going to set up a larger ABC pattern on the way down? Now we can draw that out by grabbing our Fibonacci extension tool, measure from the swing high down here to the swing low, and then right back up here for the top of the correction leg, which gives us a price completion at about 553.41. Now note, in order for that pattern to be validated, we must take out the B point, and we do have two anchored VWAPs. So far on Friday, the first anchored VWAP held. However, will the second anchored VWAP also be able to hold? Notice as we're starting to go back, as we're going back up, the MACD indicator was not confirming the move up. The MACD indicator at this point in time is looking extremely weak. On the 4-hour chart, we can also see as we were pushing up, MACD indicator just simply not confirming the move on the way up. Then on the 30-minute chart, we had that big gap down on Friday. We had a big initial 30-minute candle, and then we had all that consolidation being built. And we can see on the profile where all the volume was built out throughout the day. Now with this, if we start breaking through the upper part of this distribution area of the profile, I would want to look for the upper third of the range to come back and get tested, 573.38. Anything above that, we're going to probably undo the entire candle. However, I want to use the top of the candle, the body of it, as a target first, 574.66, then the wick, aka gap resistance, 575.05, and then see, can we go ahead and fill the entire gap? However, do we maybe form some type of lower high up in this area, and then we set up another ABC pattern on the way down? Because if we scroll back a little bit, let's remember it wasn't too long ago when we had that huge minus development area on the profile. The bottom of that zone is going to be 566.68. And I got a sneaky suspicion we're probably going to go down there and even lower throughout the course of this week. Now, as we come over, look at the NASDAQ futures on the 4-hour chart with the weekly volume profile levels. Notice earlier in the week, they tried to push it up. They could not get it up and out. We had this potential, which is still in play, A to B equals C to D pattern, which completes at about 23,944. And we have a point of control right up here just below that at 23,933.50. Now, if we do break down below the swing point at 23,368, that will void out that ABC pattern to the upside. Notice we closed right near the weekly value area low, 23,454.5. The point of control will be 23,598.5. Value area high will be 23,625.00. Now, if we go ahead and we get below value area low and we start coming back up, I do not want to use the point of control as target number one. Instead, I'd rather use this high volume node at about 23,541, then the point of control, then value area high, and then up here towards the candle bodies up here from the high at about 23,760. Notice though, we've had 1, 2, 3, 4, 5, 6, 7 consecutive candles that closed lower than where the candle actually opened. So we are due for at least a 1-bar pullback in the very near future. Now, will it be a case where we basically come up like this and then we actually set up maybe some type of A to B equals C to D pattern on the way down, taking us back down towards the lows right around August 20th. Now we come over and look at the daily volume profiles out here on the 30-minute chart. Notice we had that extreme push on the way down on Friday. We built out a lot of volume near the lower end of the range, but I want to zoom this back out. Keep in mind, we still have this large minus development area on the profile that was set back from August 22nd. And that's going to be all the way in this zone. We came into it once, we came into it twice, we got a third, and now this is the fourth time within that zone, which is very probable. We're at minimum going to come down to the very bottom of it at about 23,344. Anything below that price point, I really want to refer back over here to the weekly charts and see, can we set up some type of ABC pattern down? And keep in mind, we still have an untested point of control below us at 23,212. So now if I want to be bullish on this early in the week, I want to see on Sunday night or even Monday, do we break value area low? And then if so, more importantly, can we get back above it? If so, I would want to target the point of control. I would then want to target value area low. And then I'd want to pick off some of these minus development areas of the profile. We'll call it 23,573 up here to about 23,584.75. Anything above that, we can look to play this structure breakdown point. We can map that out from candle wick right up here to the candle body. And that price point will be somewhere about 613 all the way up here to about 632. If we're able to get above that price point, then my attention would turn towards the next minus development area within the profile, which is really going to be somewhere in the ballpark of about 678 and a quarter up here to 709. Now, if you're wondering what a minus development area is, just think about it as nothing more than inefficiencies in the market. Now, if you'd like to see how to spot hidden support and resistance levels using order flow, then you want to make sure to check out this next video right here.